Good evening and thank you for watching News 12 Connecticut. I'm Tom Appleby.
And I'm Rebecca Saran. Insurance giant AIG with offices in Wilton is the latest company to feel the crunch of the mortgage and credit crises.
Local business analysts say that even if you don't work in the financial industry, you could feel the effects of another bankruptcy.
News 12 Connecticut's Shauna Ryan joins us now. And Shauna, how big a blow could we be in for in this area?
Well, Becky, I'm told AIG itself employs about 200 people in our area, and experts tell me that's just a small percentage of the people who work in the financial sector and live here in southwestern Connecticut. They say the ripple effect of the crisis could be significant for the region.
And we're very connected. If you have an earthquake in Manhattan, you're going to have major tremors in Fairfield County.
AIG is the latest Wall Street giant to face the threat of bankruptcy after Lehman Brothers filed for Chapter 11. And some people in our area say it's causing
panic.
Clearly, they've got to raise capital. And the question is, they have $75 billion has been reported. They do have a consortium of banks which is willing to invest, and then they've got to come up apparently with another $20 billion.
Joe McGee, vice president of the Business Council of Fairfield County, says if AIG doesn't come up with the cash by Wednesday, potential job losses affecting our area would be significant.
In the financial services sector, you have about 39,000.
The root of all this problem that we're experiencing now on Wall Street and across the world really is what's been called the American housing crisis.
Real estate attorney and author Jim Randel says the housing market has to bounce back before the economy can turn around. But that will be difficult if even more people are losing the jobs that pay for those homes.
The fewer people with jobs, the fewer people who are home buyers, the more people who are distressed home sellers. It can't be a good thing.
And these financial instruments which were developed to allow people to afford houses that were very risky in their ability to finance them really was a terrible foisting on the public of a product that wasn't legitimate. And we need to learn from that.
McGee says it's a tough lesson to learn, but it's necessary to understand why this industry wasn't able to regulate itself. He says many people are wondering whether they should pull out of the market, but his advice is don't. He says this is a short-term problem and the market will come back. And Tom and Becky, unfortunately, that is not an alternative for those who are looking to retire now. I'm told that their 401ks will certainly see a big hit.
Yeah, we do hope it's a short-term problem. All right, Shauna, thanks very much. And we have a local connection, another one, to this current Wall Street crisis to tell you about. We learned today that Lehman Brothers CEO and Greenwich homeowner Richard Fuld will receive a $22 million retirement package from the company when he eventually ends his 30-year tenure with the bank.